Test, 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 test. Oh my gosh. So I was muted the whole freaking time. My computer crashed if you did not hear me. And playing back, it doesn't seem that you could hear me, so. All right. The computer crashed. Computer crashed. And I'm having difficulties opening programs now because I just immediately tried to jump back onto the stream. There are other streaming platforms that I can use, like StreamYard, where that can happen and the stream can stay running and I can just rejoin. But the problem is I'm not paying them $50 a month for 1080p. And when you stream in 720, it looks like you're not streaming in HD at all. I mean, you got people out there that are running 4K high def, 60 frame per second cameras. And this is a very powerful computer. I don't understand where the bug came from, but it's been happening every single day, multiple times a day. That's why I started uploading those daily videos instead of doing live streams, for that reason. Just in case I'm doing a live stream and it happens again, which it's a probability now at this point, every time I try to do a live stream. If I can't get it to pull up, oh, there we go. All right. If we can't get it to pull up, I was going to just go to the internet browser, pull it up there. All right, we should be good to go. That's not good, but I mean, I can't trade if there's no charts, bro. Just give it a minute. Like I said, I'll pull it up. Let me pull it up on the internet. Let me go this way. All right, let me relink. Sorry guys, I know this is very annoying. We will do something. Let me put it in the for everybody that did lose it. I got you. All right, perfect. So there's a new link. There's a new link in the chat. Now you hear me. This thing is being stupid. I don't like their online platform, but if I can't get the other one going, then that's what I'll do. I don't like it because it's different. But we'll use it. Just give me a second to let it load up and make sure there's no sensitive data that's being shown. All right. Yeah, this is what it looks like. Yeah, I don't like it. I don't like this way, but at least I got a chart. Maybe. All right. We got a chart. We're in business, but I don't have any of my lines, and it don't matter at this point, I guess, because the trending day has started. But I can show you some positions that I'm in. Currently, I have a short put. There we go. I have a short put on the, or a short call, sorry, on the MES contracts. The Jan 1999 days out, 4650 calls. We're trading at 4450, so you'd have to see 200 S&P points in order for that trade to get stopped out. And then here is the option chain. I mean, it's completely different, but right there's that call. You can see that, that's a pretty decent distance from where near-term price is trading. Come on. All right, so I can pull up this stuff, no problems. Well, look at the quotes. It's stagnant. Tasty, man, you need to fix your platform. It lags. But it does do decent fills. I don't have trouble getting fills. Unless it's a very, like, illiquid product, then I'll have trouble getting fills. But if it's a liquid product, no problem. Let's go look at the Magnificent Seven. Apple, yeah. Oh my God, there is no reason at all that the S&P should be getting crushed as badly as they are. Oh, I want to talk about something before the live stream crashes again, or the computer or whatever. Because if it does it again, I will not be back. I'll just upload a video later. But so all over Twitter, I see people that want rate cuts. Right now, the market is pricing in that we will not see any new rate hikes. And in fact, they got the market pricing in that we will in fact see rate cuts as far as close as June of next year. All right, so that's what the market is currently showing. Now, a lot of people want rate cuts because they associate rate cuts with a bullish market, right? Because back in 2020, obviously, the Fed had to cut rates in order to stop a free fall that was occurred by a pandemic right here. All right, so they started cutting, but that's not always the point, or that's not always true. They did a lot of other things too, right? They 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 messed with repo markets. They did a lot of stuff. They didn't just cut rates. They were literally propping the market up. So I'm going to pull up the Fed funds rate real quick, if I can, right here. I want to show you. All right, this is the Fed funds rate, and explain to you that rate cuts don't always mean bullish markets, right? Right? It did here, obviously, but like I said, they were doing other things and buying stuff. But look here, all right? This was a time when we were at 1% at the Fed funds rate. We're at 5.25 to 550 right now on the Fed funds rate. So it was climbing, right? They were hiking rates, but it wasn't like as steep as we got now. They were just hiking over time, and the market was still bullish. And then you had rate cuts that started here, right? Right before the GFC, they started cutting rates. And then you had one final push up, This was to make a fresh all-time high and stop everybody out. And then it rolled over. As they were cutting, look how aggressively they cut. And look where my crosshair is on the candles up here. So they cut all the way down to 2%. And the market still rolled over. And then they cut more. And the market was still rolling over. The Fed was cutting, and that was not bullish. Now, why was this? Why is this the case? Yields. So if the Fed is going to cut interest rates, then yields are going to drop, right? And if they're going to cut interest rates, they're doing it for usually a bad reason. It's not really a good reason why they would cut interest rates. So what investment banks and hedge funds do is they buy treasuries, the near-dated treasuries, to lock in these high rates. All right? So it's called capital rotation. They rotate capital out of riskier investments like the S&P, NASDAQ, stuff like that, growth stocks, all of it. They'll rotate out of those risky assets, and then they'll jump into a closer near-term treasury or bond to lock in that high rate, right? Why would I leave my portfolio open to risk when I can lock in near-term rates? Now, people buying them also is literally what causes it to go up, causes bonds to fall. So let's pull up the TLT, because the TLT the TLT is a 20-year. So maybe you don't want to do the 20-year. Maybe you want to do something closer. The IEI is a 3 to 7 year. So this would be like you would be buying this one based on the fact that you believe that the markets, the bigger investors are going to try to lock in these yields at a higher rate. So if the Fed starts to cut, right? Look how steep and aggressive that hike was. If the Fed starts to cut, then they're going to want to, a lot of them are. They're going to run into these because these are like riskless unless, the U.S. government goes bankrupt. But so that's why the reason I'm telling you this is interest rate cuts are not necessarily bullish. So where would you find an opportunity in that circumstance for next year, right? Because like I said, nothing is planned to start happening anytime soon. I mean, the Fed is still talking about potential hikes, which the market is saying, no. There isn't going to be any hikes. In fact, you're going to start cutting in the middle of next year. So you could take advantage of that by buying a long-dated call, say in the TLT, or any one of these, bond products, ETFs, right? These are all bond product ETFs. I wouldn't buy junk or nothing like that. I would just straight go to the TLT, buy calls, because this right here will give you an opportunity. If the Fed does start to cut rates, people will run to these treasuries. The ones that haven't already, they will run. Like, we know that market participants are not running into these, not as much as will happen, obviously, later, right? Why do we know? Because growth is moving up. So you literally had the bond market crash as growth stocks getting a pop. Like, I'm talking about the beginning of the year, right? For 2023, growth had this magnificent run to the upside. Just absolutely stellar move to the upside. So all the people that are invested in this, all of these stocks, they will run from here and they will go lock in those high yields before the Fed starts cutting. because once the Fed starts cutting, those yields are going to go down. And it's an opportunistic time for hedge funds to basically say, okay, they're going to cut because they're fearful, and I don't want to be in a risky asset such as Facebook, Tesla, Meta, Netflix, Amazon, Google. Why would I leave my money there when I'm guaranteed to get 5% if I go do it now, right? If I lock it in now. So that's why that necessarily won't be bullish for risk. Fed cuts, all right? So whatever you hear on Twitter, please make sure that you follow macro guys, like hedge fund guys, macro guys, both bullish and bearish ones. Do not follow perma bulls only or perma bears only. Follow them both so you can learn a little bit about this stuff, because you can guarantee that when we get closer to where I'll start sensing a Fed rate cut, I will be buying TLT. I'll be buying calls in the TLT. One arguably could do it now while it's cheap, but we don't know how much further this is going to go, because there's a lot of banks and stuff that are locked into those higher time frame, those 30 and 20 year out bond, or yeah, you know what I'm saying? So if they start unwinding their balance sheet and then they end up, banks start to fail, then those bonds are going to get crushed more. Like, this could just be a move up on the near term. We could see TLT down in the 70s if the dollar and oil stay strong. If the dollar and oil stay strong, you won't be able to run to this. But if the dollar and oil weaken and the Fed starts to cut rates, TLT is the place to go. All right? The TLT is the place to go. We've never seen this happen in the TLT's history. I mean, I pull up the yearly chart here. Right here is 08. Right? 09. Down. Look at this. 2022, 2023. Like, insane sell-off in the bond market. That is never a good sign. And that's a big one. So, all the people that are long duration, so when you hear someone say they're long duration, they're long those longer term treasuries, 30-year, 20-year, 10-year. They're long that stuff. So if they start liquidating, what's going to happen to that? That's going to cause more sell side activity on bonds. Bonds are going to sell off harder. So we don't know if we've seen maximum pain yet on this trade or not, but when we do, it will be an opportunity. It will be an opportunity. Let me go back to the SPX. So just remember, 2008 was a bullish year. 2009 was a bearish year on the TLT. 2008 was a bearish year on the S&Ps. 2009 was when the market started to recover. So this is people running to bonds or running to the TLT, right? That's why it was so bullish. And then this is people coming out of the TLT going back into risk. It's capital rotation. So don't necessarily believe that you're going to be able to run to the S&P 500 when they start cutting rates, or even Bitcoin for that matter. Now, Bitcoin has never been in an environment that it is right now, right? It's never been in high interest rate environments, and it's never been in high inflationary environment. It's never been in a situation where, well, I guess China has always been trying to screw people from being able to trade Bitcoin. They've changed their minds now, but now it's the US doing the exact same thing almost as China. Not quite to the extent, obviously, but they're trying to make it difficult for people to trade Bitcoin. So we don't know how Bitcoin would react in that situation, but you know, the mainline narrative is Bitcoin is going to see a halving right around the same or a little bit before the government starts to cut rates. So that typically one would assume would make Bitcoin bullish because Bitcoin loves rate cuts. We know that for a fact. I mean, Bitcoin loves stimulus and rate cuts. Loves it. So I don't know if we'll see stimulus. It'll be not QE, right? They won't call it quantitative easing. They'll call it something else, but it'll be QE. It'll be the same thing if that were to happen, right? If the markets were to literally shit the bed. So just be careful with your money. And like I said, run to TLT in that in that circumstance, because other people will be locking in those high interest rates while they still can, because they know that the Fed can cut really quickly if they need to. They can cut just as quick as they can go up. But yeah, we'll see what happens. I was kind of hoping I would be able to lock in a trade here before we got into a trending day. Oh, there it is. Awesome. So I can kill that. Beautiful. Before we got into a trending day, what are we doing now? This is the NASDAQ. NASDAQ moves too quick for my liking. All right, so the S&P 500 hasn't even moved to its expected move. Let's go look at the SPX, because I do have today's expected move up. Yeah. As of yesterday, volatility was pricing in the expected move up to 44.09 or as low as 43.44. That's for the daily expected. The weekly expected is a lot wider now than the market was pricing at the beginning of the week or at the end of last week. At the close of last week is when I took those numbers and did that, made the expected move. But you're still in a small range day, so that doesn't necessarily mean that we're going to see a downtrend day. But I would love to be able to see my other charts. Bonds, what are they doing? Because my data on this is lagged. So we know that the S&P 500 has a lot more volatility priced into it, so it can move a lot more than it has moved so far today. TLT having a bad day. Bonds having a bad day, so yields must be climbing today. Yeah, they were coming off pretty good though there for a little bit. 20 years up. There's the 10-year. 5 years having a very nice day. Very, very nice indeed. Higher dollar, higher oil, higher yields. Lower bonds. Lower risk. Usually. I'd say that's probably why. Just give me a second. I'm pulling this up. And then finally there's the dollar. And then NASDAQ day. NASDAQ's green on the day. Or the NQ is. The futures. Here's the futures. So that's your daily candle for the futures on the NQ.